this week has the potential to be a key turning point in the Brexit process and also for UK markets. This potentially could be the week that the government triggers Article 50 to begin the formal Brexit process. The Brexit bill was passed recently and also has received Royal Assent, so the path appears to be clear for Prime Minister May to go ahead and trigger the start of the Brexit process. This week there are two EU summits where a number of people are getting together and could provide an opportune time for the UK to trigger Brexit. On Monday the 20th, we have the Eurogroup Finance Ministers meeting. This comes on the heels of the G20 Finance Ministers meetings being held on Saturday the 18th. And then on Saturday the 25th, we have an EU summit in Italy, and that's what I think would probably be the more likely time for this to happen. The government has indicated plans to trigger Article 50 by the end of the month. March 31st is coming up pretty fast next week, so it seems as though the stars could be aligning for this to be the week of the formal Brexit launch. Then, of course, the question becomes what happens, how does the EU respond to this, and how we get into negotiations. But for now, the UK side of this appears to be ready to start to move forward with Brexit. Brexit, since the big vote last summer, has had a huge impact on trading in UK markets, and but interestingly enough, as we've moved from the vote to Article 50, it does appear as though we may be reaching a turning point for trading in the UK as well. And I'm going to start by showing sterling for this in particular. And what we see here is that following the vote, we had a big plunge in the value of the pound. It leveled through the summer and dropped again. But look at this. Since October, really almost 6 months now, we've been forming a pretty sizable base here in sterling between about 120 and about 127, give or take. 126.85 is a 23% retracement of this big decline. Meanwhile, we're seeing here on lower highs in the RSI telling us that the downward pressure is easing in the marketplace. And so what have we got here? If we go off this intraday low in early October and the low in January, you have a double bottom, or you also have a head and shoulders bottom forming with a left shoulder back in October, the head again in January. And recent trading suggests the right shoulder. We had a big decline from the beginning of February through the middle of March, but since the bill got passed, since the bill got through the House of Lords, we started to see and in the House of Commons shot down the amendments and passed a clean Brexit bill, and the Queen has signed off on it. We have seen that this has all started to turning back up again. This is a nice rounded bottom here forming, and the cable starting to break out to the upside. On top of that, RSI back above 50 signals momentum is starting to build to the upside once again. We're up here around 123.60. There's resistance around 125 and then around 125.65. So we are starting to see an upturn in the pound as we move towards the triggering of Article 50. It's almost the inverse. The people who had sold on rumor are now looking to, or on anticipation of this Article 50 and Brexit, are now looking to cover shorts and come back the other way on the realization. So it's kind of the flip of the old buy on rumor, sell on news, old market adage out there. So anyways, it looks as though this could be a big week. On top of this, the other thing we're seeing is following the Bank of England meeting where MPC member Forbes voted for a rate hike on the back of inflation. We have UK inflation coming out this week on Tuesday. That might start to give us an indication of, is the Bank of England coming under pressure not only to stop cutting rates and go neutral, but also potentially to have to raise interest rates over the longer term. So that's also significant for the UK this week. As we look more at the currency, we'll look at the euro pound. We can see there had been a rally in the euro against the pound in recent weeks. This looks like it's topping out a lower high and starting to roll over. Once again, we're seeing the pound starting to strengthen. Relative to the yen, it still has some work to do. We're still basically in the downward trend, trending lower. Look at this between the 50-day and 200-day moving averages. I don't even have to draw trend lines. The averages are bounding this falling channel for me. And we are seeing it stabilize, though, somewhere in and around 140. We'll see. Whatever way, eventually the pound will break out of this. Whether it breaks to the downside or breaks to the upside will give us an idea of which way we're looking for the next trend. Even the RSI between 40 and 60 is still showing neutrality against the yen at this point in time. Something that's really important to note also is what action may we get in UK stocks. The reason is because when the pound collapsed, it ignited a rally in the FTSE. And the reason for this is basically because a lot of the companies in the FTSE are big global multinationals. When the pound went down, they got a lot cheaper relative to their competitors, and the rally in the stocks has offset this. So now that we're seeing, though, the pound starting to bottom, we could be seeing a peak in the FTSE, in the UK 100. And what I'm looking at here today is we actually had a spike up through 7,400 to a new high, getting up as close to 7,440. We've since seen it come back under, though. This could be a bull trap peak. This potentially, if we ended up down, could end up being a key reversal day. And at a minimum, it looks like we might be into some sort of a shooting star candle. All of these are suggestions that we could be nearing exhaustion. We could be nearing a buying climax. We could be nearing a peak. So keep an eye on that. On top of that, this new high not confirmed by the RSI, negative divergence as well. It did break out of a downtrend, but even that's looking a little iffy at this point in time. So if we start to see a rebound in sterling, we could be seeing a peak in the FTSE. Keep an eye on that. It's not uncommon for the currency and stocks to trade in opposite directions. We've been seeing that in Japan for years and years, and we're seeing that in the UK as well. So it looks as though we could see a big week for trading in the UK, not just in the currency, but also in the stock market.